Florida's condo story flipped. Prices are slipping even as deals climb. The numbers tell a market learning to breathe differently. Start with where we are and when. In October 2029, Florida's housing market logged more closed sales and more listings at the same time that prices eased. Single-family closings reached 21,191 statewide, up 13.8% from October 2024. Condo and townhouse closings counted 7,223, an 11.1% year-over-year jump. Median prices moved down. $411,105 for single-family homes, off 0.9% year-over-year, and $300,000 for condo-townhouse units, down 4.8% compared to October 2024. For condos, that $300,000 statewide midpoint sits inside a larger slide. Across the past 12 months, condo prices fell between 4.8% and 9.9%, depending on the lens you use, the steepest year-long drop since the 21.8 plunge in 2009. Inventory tells the other half of the story. Single-family homes sat at a 5.1-month supply in October 2025, edging toward balance. Condo-townhouse properties reached a 9.3-month supply. Months of supply is a simple measure with big consequences. It estimates how long it would take to sell all current listings at the current pace. 6 months is considered balanced. Above 6 shifts leverage toward buyers. Above 9, condos are operating under buyer-friendly dynamics statewide. These are not abstract figures. Florida holds roughly a fifth of all condominiums in the United States. When this segment moves, the ripple runs from Punta Gorda to Tampa, from Sarasota to Cape Coral. In those metro pockets, condo prices have fallen between 12% and 18% year over year. The statewide decline ranges from 4.8% to 9.9% in the last 12 months, but in places like Punta Gorda and parts of Sarasota, the ground gave way faster. What happened? Costs piled up. Many condo owners are choosing to sell because ownership got more expensive. Homeowner association fees climbed. Insurance premiums climbed. Expanded safety requirements that followed the Champlain Tower South collapse in Surfside in 2020 introduced steep renovation assessments in buildings across the state. Add those bills to a market now showing 9+ months of supply, and the outcome becomes visible. More listings and lower prices, especially in older condominium stock that must fund upgrades. The calendar complicates the comparisons. Hurricanes Helene and Milton struck Florida in late September and early October of 2017. The disruption added a base effect to year-over-year numbers. Some closings were delayed while inspections were rescheduled and repairs checked. But the flow of deals in October 2025, that 21,191 single-family figure, and 7,223 condo-townhouse closings, suggests the bulk of the sales rebound is real, not just a bounce from a storm-dampened month. New pending sales and new listings look higher partly because last year's base month was hampered, yet the persistence of easing median prices shows an underlying shift toward balance and, for condos, toward a buyer's market. Zoom into the streets where this is felt. In Cape Coral, an investor bought a 2,610-square-foot retail building at 631 Cape Coral Parkway E for $600,000. It's not a condo, but it's a transaction that anchors reality in that corridor. Across the Caloosahatchee, in Punta Gorda, and up the coast to parts of Sarasota and Tampa, condo sellers are meeting a market that expects concessions. Price reductions in those areas range from 12% to 18% year over year. Statewide, the condo-townhouse median of $300,000 in October 2025 reinforces the pattern. More auctions, more negotiating power for buyers, and a narrowing of prices that had stretched during the frenzy. At the same time, the building machine has not stopped. In Estero, a groundbreaking on November 13th celebrated the Kingston community, bringing together national builders like Lennar Homes, Neal Communities, Pulte Homes, Taylor Morrison, and Coulter Homes. In Bonita Springs, a 68-acre mixed-use project called Midtown at Bonita is aiming to become a destination a quarter-mile east of Interstate 75 along Bonita Beach Road. In Naples, the Halcyon Residences and Marina is designed on 9 waterfront acres with full entitlement secured. Sales are slated to begin in January 2026, construction to start in 2027, and completion planned for late 2029. Also in Naples Harbor House, an intimate collection of 14 luxury residences on Gulf Shore Boulevard North has gained design approval, clearing a city review hurdle on the way to groundbreaking. The pipeline is real, time-stamped, and long. Those timelines matter because the condo market's current pressure has origins in costs that won't disappear overnight. Many buildings face higher HOA budgets to fund inspections, reserves, and structural work mandated after Surfside in 2021. Insurers have repriced risk in a state where coastlines dominate the map. The result is a cascading set of decisions. Owners who cannot or will not shoulder higher assessments are listing, contributing to a 9.3-month supply. Buyers, for their part, are confronting a broader menu than they've seen in years and are matching that choice with caution on price. Consider the psychology in October 2027. 5. Single-family buyers stepped up into 21,191 closings, a 13.8% lift from a year earlier. That segment's median price of $411,000, $105, fell just 0.9% year over year, signaling a gentler rebalancing. Condo-townhouse buyers transacted 7,223 closings, 11.1% higher than the hurricane-affected prior October, but the median price at $300,000 and the 9.3-month supply suggest greater selectivity from buyers and more urgency from sellers. Put simply, Florida's single-family market is sliding toward equilibrium. Its condo market is working through a sharper reset. The micro-stories carry the larger theme. On 5th Avenue South in downtown Naples, a completely remodeled condominium opens through a glamorous lobby, 2 en-suite bedrooms plus a flexible den and 2.5 baths. A sun-filled great room extends onto a covered lanai overlooking Cambier Park. That specific finish level and prime address will still find demand, but the sellers of similar units statewide are running into a buyer who can compare across more listings in more buildings with more leverage. It only takes one number to see it: a 9.3-month supply. Head north a few miles, and the development arc continues. The 68-acre scope of Midtown at Bonita is a bet that the way Southwest Florida lives, dines, shops, and connects will pull people into a walkable core east of the highway. The address, a quarter mile east of I-75 on Bonita Beach Road, stakes a claim on access even while condo prices slide 12% to 18% in parts of Sarasota and Cape Coral. Builders are committing years-long capital to the region. In Naples, Harbor House's 14 residences are designed with coastal modern cues on one of the city's most iconic waterfront stretches. And the Halcyon's 9-acre canvas sets a multi-year delivery schedule. Sales in January 2026, shovels in 2027, keys in late 2029. Why push forward now? Signals suggest that developers are reading the same statewide metrics and concluding that Florida's long-run demand story remains intact. The near-term condo price drop, 4.8 to 9.9% over 12 months, is real, and inventory, more than 9 months of supply, is real. But closed sales are also up double digits year over year in October 2027-5, and single-family pricing has eased by less than 1%. For builders working on multi-year horizons, those conditions can argue for acquiring land, entitling projects, and being ready when absorption strengthens. There's also a national backdrop to consider. Across the United States, more than $950 billion in commercial real estate loans mature in 25. That wall of maturities will stay elevated for another 2 years, creating pricing and refinancing challenges. Investors are weighing portfolio risk, including insurance and extreme weather, with more rigor. The national debt sits at a record $37 trillion, underscoring a policy environment where rates, liquidity, and investor appetite can swing. Household growth slowed to an annualized 1.26 million in the first quarter of 2025, below the 1.93 million average from 2019 through 2022. Those numbers form the macro climate in which Florida's condo market is trying to right itself. When you step back, the causal chain becomes clear. What happened is quantifiable. Condo prices in Florida fell between 4.8% and 9.9% in the past year, and inventory climbed to 9.3 months of supply in October 2025. Why it happened points to ownership costs, HOA fees, insurance premiums, and post-Surfside safety requirements that pushed more owners to list, swelling supply above the 6-month balance point. Who is affected spans the spectrum. Retirees facing higher assessments in places like Punta Gorda, first-time buyers staring at a $300,000 condo-townhouse median, investors reevaluating projects in Tampa after seeing a 12 to 18% year-over-year price dip in certain submarkets, and developers in Naples and Bonita Springs who are sequencing 9-acre and 68-acre projects into 2026, 2027, and 2029. The on-the-ground experience reflects those tensions. Sellers are watching days on market stretch, often into the rhythm implied by that 9.3-month supply. Buyers are inspecting not just square footage and finishes, but reserve studies and insurance line items. A second-floor, 3-bedroom, 2-bath end unit that was renovated 2 years ago, new stainless steel appliances, including a Bosch, will draw showings, but the offer calculus now bakes in assessments, premiums, and the broader spread of comparable listings. Even in the luxury tier, where a 14-residence building on Gulf Shore Boulevard North can capture attention on design alone, the question of delivery timing, how late 2029 feels to a buyer today, becomes part of the value equation. The storms of 2024 created their own echo. Hurricanes Helene and Milton hit in late September and early October of that year. New pending sales and new listings 2 Octobers later look higher, in part because they are, and in part because the base month was depressed. Still, closings were less affected then, and in October 2027, they rose 13.8% for single-family and 11.1% for condos and townhouses. That split tells you momentum exists, even while pricing adjusts. B. It is a market trading speed for stability. Look closely at the geography of stress and resilience. In Cape Coral, where a 2,610 square foot retail property fetched $600,000 at 631 Cape Coral Parkway E, the commercial strip shows transaction flow. In nearby Punta Gorda, Sarasota, and Tampa, condo sellers saw 12 to 18% year-over-year price declines. In Naples and Bonita Springs, 9-acre and 68-acre construction plans move forward with timelines that stretch to late 2029. These are not contradictions, they are layers. Florida's market can absorb new projects in one zip code while rationalizing prices in another. The common thread is the cost of ownership and the supply on the shelf. Inventory mechanics are central. A 5.1-month supply for single-family in October 2025 suggests a near-balanced state. That's why the median there eased only 0.9% to $411,105. A 9.3-month supply for condos explains the larger step-down to a $300,000 median and double-digit declines in cities like Tampa and Cape Coral. In a market where 6 months is equilibrium, the farther you drift above 6, the more the market listens to buyers. At 9 months and change, the conversation shifts. Inspections, reserves, insurance, and upcoming assessments weigh more heavily than staging and paint. The structural side, post-Surfside requirements, is about more than codes. Expanded safety rules require buildings to plan, fund, and execute work that ensures habitability and structural soundness. Those mandates translate into reserves and assessments. For an owner on a fixed income, that can force a sale. For a buyer, it can delay a purchase until the scope and cost are known. Multiply that across thousands of buildings in a state that holds roughly 20% of the nation's condos, and you get the statewide median, moving to $300,000, with a 4.8% year-over-year decline in October 2025, and a broader 12-month slide as steep as 9.9%. There are policy levers in motion. Legislation aimed at providing financial relief to condo owners has been signed, intended to soften the impact of these rising costs. Whether that relief threads the needle between safety and affordability will be visible in the numbers. Months of supply easing back toward 6, and median prices stabilizing would be early signs. Until then, inventory above 9 months points to more negotiation, more price discovery, and more time for buyers to choose. Development will keep shaping the map. The Halcyon Residences and Marina marks out 9 acres in Naples, with sales on the calendar for January 2026 and construction scheduled for 2027. Completion in late 2029 means buyers will be writing contracts years before move-in. In Bonita Springs, 68 acres at Midtown at Bonita are being positioned as a new heart for dining, shopping, and connecting, a quarter-mile east of I-75. Estero's Kingston community has broken ground with a roster that includes Lenner Homes, Neal Communities, Pulte Homes, Taylor Morrison, and Coulter Homes. These projects pull demand forward while the condo market, in aggregate, leans into a buyer's market. That juxtaposition is Florida in a nutshell. Long-run growth plans amid immediate price adjustments. A quick reality check on single-family versus condo behavior. Single-family closings of 21,100-91 in October 2025, up 13.8% with a $411,105 median down 0.9 and a 5.1-month supply. Condo-townhouse closings of 7,223, up 11.1%, with a $300,000 median down 4.8% and a 9.3-month supply. The contrast is concise. One segment is bending, the other is bowing. For buyers, the roadmap is straightforward. In Punta Gorda, Cape Coral, Tampa, and parts of Sarasota, the 12% to 18% declines year over year translate into real savings against last year's list prices. With a statewide $300,000 median in October 2025 for condo-townhouse units, consider that your anchor as you evaluate buildings with higher HOA fees and rising insurance premiums. Factor in assessments tied to safety work. And look at months of supply. At 9.3 for condos, patience and diligence are advantages. For sellers, the calculus is different. If your building has completed required work and stabilized budgets, highlight that. In markets with 12 to 18% declines, pricing in front of the curve can save months of carrying costs that include higher premiums and dues. For investors and lenders, the national $950 billion wave of maturing commercial loans in 25, along with the $37 trillion U.S. national debt, frame a period where capital is selective. That can influence condo project financing and the pace at which projects like a 14-residence building on Gulf Shore Boulevard North move from approval to groundbreaking. Risk analysis, insurance, climate exposure, regulatory environments is moving to the front of the underwriting stack. In an environment where household growth slowed to 1.26 million annually in the first quarter of 2025, below the 1.93 million average from 2019 to 2022, the build it and they will come model is riskier. Builders along Bonita Beach Road and in Estero are answering with location bets and phased timelines. 60, 70 acres here, groundbreaking in November there, sales in January 2026 across town. There is another subtle factor, the psychological reset after the 2020 D4 storms. When Helene and Milton struck in late September and early October, they froze decisions. 2 Octobers later, the thaw looks, on paper, like a surge. New listings, new pendings. But the more telling metrics, a 9.3-month supply for condos, a $300,000 median, a 4.8% year-over-year drop in that median, are not weather artifacts. They're signals of a market finding a new clearing price under the weight of higher ownership costs. In the daily rhythm, you can feel the clock slow. A 3-bedroom end unit with a new Bosch appliance package and 24 by 24 porcelain tile meets buyers who now schedule second showings, ask for insurance quotes, and compare reserve disclosures. A seller of a 2,945 square foot single-family home with walnut hardwood floors and a remodeled kitchen hears feedback tied to monthly carrying costs as much as to crown molding. The math is in the monthly, and the monthly got bigger in many condo buildings after 2025. So, what's next? Base case, through June 2026, signals suggest Florida's condo market remains under pressure. Inventory near or above 9 months supply keeps leverage with buyers. Expect median condo-townhouse pricing to continue negotiating around the $300,000 anchor seen in October 25, while single-family holds closer to balance around a 5.1-month supply and a median that eased just 0.9% to $411,000, $105 at last check. Closed sales can stay positive year over year as storm base effects fully wash out and as buyers step into more choice. Two watch items could shift the path. First, ownership costs. If HOA fees, insurance premiums, and mandated safety upgrades stabilize or decline, potentially aided by targeted relief, months of supply could slip back towards 6 and prices could firm. If costs climb further, inventory could stretch beyond the 9.3 mark and deepen price cuts in areas already down 12 to 18%. Second, capital and credit. With more than $950 billion in commercial loans maturing in 2025 and heightened focus on portfolio risk, financing for new and existing projects may tighten. Watch how that affects timelines like the Halcyon's 2027 construction start and late 2029 completion. If credit remains available and developers hit their dates, long-run supply will arrive when the market is ready to absorb. If credit tightens, deliveries could slip, and scarcity in specific segments could build even as older condo stock struggles. Underneath it all, Florida keeps building. 9 acres in Naples, 68 acres in Bonita Springs, groundbreaking in Estero, 14 residences approved on Gulf Shore Boulevard North, a $600,000 closing on Cape Coral Parkway E, a $300,000 condo-townhouse median statewide in October 2025, a 9.3-month supply, and a market that for the first time since the 2009 memory is forcing buyers and sellers back into a conversation about value. If this helped you read Florida's housing pulse with clarity and numbers, consider subscribing to stay ahead of the next move.